the next time it'll be bigger than the last time. It'll be more aggressive. There'll be more money printed, and there'll be a larger segment of the population that'll say, oh my God, they can never stop printing money. And that's the famous von Mises quote. Once everyone realizes that it's part of the policy and they can never stop, the currency's doomed. It's just literally doomed. And sadly, this is how hyperinflations occur. It could go to zero. I fully expect that kind of in the tail end of this year, probably in the next 3 months, we're in September now, I see us at the end of the year at 140, 150 Bitcoin and maybe $4,000 gold. And who knows, maybe the Bitcoin overshoots and goes to 150. Maybe we correct a little bit then. And I think this cycle takes us to kind of 200, 250 in Bitcoin. I think this cycle maybe takes us to 5,000 in gold.
According to Lepard, the government's spending trajectory is much like an addict's compulsion. To sustain the system and to maintain political support, policymakers must keep spending more. Just like an alcoholic needs increasing amounts of alcohol to feel the same effect, the financial system requires ever larger injections of money and credit to avoid collapse. This is why, he argues, there's no realistic path toward fiscal restraint. The system is designed to perpetuate itself through debt and inflation, which means the cycle will only intensify until something breaks.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
What you can see is that the central banks have figured it out. Large hedge funds have figured it out. BlackRock has figured it out. Ray Dalio, the largest hedge fund manager, very successful man, he's figured it out. And so, what Lynn describes as nothing stops this train, and what we've seen in terms of the behavior of the government and the trend in behavior of the government is that they just cannot and will not stop spending. The system is constructed in a manner which forces them to spend, to keep it going, and to buy votes at an ever-increasing rate. And so it's like an alcoholic has to keep drinking more, or a drug addict, you have to take more and more and more to get the high. Well, eventually you kill yourself. And that's what's happening with the system. It's eventually going to kill itself. And it's showing up most notably in the obligations, the trusted obligations of the system. Long bonds, which used to be the base of the financial system, have gotten destroyed, particularly since 2020. And the things that are outside of the system that, represent a form of money that the system can't mess with, Bitcoin and gold, have skyrocketed. I mean, since 2020, in bond terms, gold's up, 250%, and Bitcoin's up, 2,000%. I mean, it's insane. And so that's a signal that something is going on here. And, whether it's the people buying, gold bars at Costco, or the people going to the coin stores and buying coins, or, the blue collar workers that I've worked with, that I know who take all their savings and put it in silver coins. I mean, it's just kind of coming from everywhere. And, this awareness is it's growing and growing and growing. And yet, the average person isn't really tuned into it. And we're still, as Saylor says, this is the gold rush. We're still, I don't know where we are on the Malcolm Gladwell 10% tipping point. We all know the theory. You hit 10%, and then it's going to rapidly accelerate until you hit 90. And the same time it got from 0 to 10 is the same time it goes from 10 to 90. Well, we're 16 years into Bitcoin. I don't think we're actually at 10 yet. I think we're maybe at 5. But we're growing. We're going there pretty quickly. And, to my way of seeing it, it's going to accelerate here in the next 5 or 10 years. And so I think we're all going to be stunned. I mean, I know it's in the fund I manage, the things I watch, it's very easy to think, well, gosh, this has gone up a lot. And usually when you're investing and you have something that goes up a lot, you think maybe it's time to sell. And, but then I look at the bigger picture and the construction of what's going on, and I realize that no, if this is the fundamental shift that I think it is, of growing awareness of everybody of the issue, then we don't sell until everybody's aware of the issue and it's no longer an issue. And that's, we're not there yet, not even close. So, as you and I've talked about in the past, I mean, I think gold's going to 10,000. I think Bitcoin's going to 1 million. I mean, and that's not that far out. I mean, within a 5 to 6 to 7 year window. We have never had a form of money that would not be diluted in some form or fashion. There's never been such a thing. Even gold, 1.7% a year. Every 45 years, the amount of gold on the planet doubles. 21 million, it's fixed. I think that fact right there explains why it can go up forever. Because it's the supply is perfectly inelastic. And so, I think that fact right there is also why it's really hard for people to get their heads around it. If you believe that fact, if the demand just keeps on growing and the supply is fixed,
the only thing left to change is price.
The only thing left to change is price. Yeah, that's it. And by the way, and it's not, okay, so you could have said that a bunch of years ago, but you would have, the volatility and everything, say, am I right about it? But man, now you got 16 years of this shit. Do you know what I mean? And no financial asset. I mean, there's so many amazing things going on. How can you be a financial advisor, of any kind, and not be pushing Bitcoin to your investors, or not even mention or poo-poo it, when it is the best performing financial asset in the past 16 years? Not by a little bit, Danny, by an enormous amount.
You're just proving you're terrible at your job.
Yeah, right? How can you do that? I mean, I get it. If you didn't get it out earlier on, fine. If you're skeptical, fine. If you're still skeptical, fine. But at some point, the evidence, your lying eyes, the price, you just can't ignore it, right? The point is that gold smells what's coming next because it's already moving, whereas Bitcoin is still lagging a little bit. But there's another chart, I don't have it here, but it shows M2, global M2, and it continues to grow and it's starting to go up. The global M2 is now growing at about 4.8% a year. It actually went slightly negative when Powell tightened things greatly in 2022, but we're back to growing. We've hit an all-time high. And all I would say is, Bitcoin people should be just rooting for gold because it's the early indicator. And so I fully expect that kind of in the tail end of this year, probably in the next, 3 months, we're in September now, I see us at the end of the year at 140, 150 Bitcoin and maybe $4,000 gold. And who knows, maybe the Bitcoin overshoots and goes to 150. Maybe we correct a little bit then. And I think this cycle takes us to kind of 200, 250 in Bitcoin. I think this cycle maybe takes us to 5,000 in gold. I don't know. Look, some of this is just reading tea leaves, and it's impossible to know with great certainty what's going to happen. But I find I want to offer words of encouragement to the Bitcoin people. Don't be mad that gold's running, be happy because it's about to come to you. and I own both. And I think it's very important, people sometimes say, well, what's going to happen this week, this month, next year? I've been around, I've done this for a long time. I've been through a bunch of these cycles, and I try to think in 5-year time frames. As you all know, in 4-year time frames, you've always come out ahead in Bitcoin. And, trying to predict the next month or week or year, a half year you can kind of do, but it's kind of a mug's game. You just don't know. But I'm pretty sure that, in several years, and I rely actually a lot on the power law model. I think it's a decent model. It explains a lot going backwards on an R-squared basis. Now, I eventually think it'll break to the upside because I do think we'll get into hyper-Bitcoinization. the other thing I would say that I think is a very important point, Danny, and I want to make is that all of this is happening just in terms of kind of a small big print. We're kind of in a big print. They're kind of doing some shadow QE. They're kind of talking about stuff. We're anticipating lower Fed funds, et cetera. But this isn't really the big event yet, okay? We're just kind of warming up. Imagine something really breaks. A la 2008 or 2020 COVID. And that's possible. Not certain, but possible. I think it's likely within a 2 or 3 year time frame. Something really breaks, and you know what they're going to do. They're going to bring out the monetary fire hoses. And man, when that happens, just look out.
Yeah.
We're going to Fed balance sheet 50. And this is how currencies fail. The next time it'll be bigger than the last time. It'll be more aggressive. There'll be more money printed. And there'll be a larger segment of the population that'll say, oh my God, they can never stop printing money. And that's the famous von Mises quote. Once everyone realizes that it's part of the policy and they can never stop, the currency's doomed. It's just literally doomed. And sadly, this is how hyperinflations occur. It could go to zero. I don't wish that on America. I actually don't think that's the base case of what will happen. But it's a tail possibility if we don't get our shit together. And so, and I feel very comfortable leaning on the inflation side. You know, is this trade gonna make me fabulously rich? Who the hell knows? But is this better than any other trade out there? Oh yeah, I'm pretty sure about that. I mean, this is the right, we are on the right side of this trade, unless suddenly Washington, D.C. gets incredibly responsible. And of course, whenever I say that, everybody laughs because it doesn't feel very likely. But, stranger shit's happened. And if things get painful enough, maybe they will get responsible. So we have to keep that in the back of our mind that, if they get responsible, this isn't as obvious a trade. But, as long as they're behaving the way they're behaving, I feel like we're on the right side.
That realization, what economist Ludwig von Mises described as the moment when the public understands currency debasement is permanent, is the tipping point that leads to outright currency collapse. While Lepard doesn't believe U.S. hyperinflation is the base case, he acknowledges it as a real tail risk. If Washington fails to reform and spending continues unchecked, the dollar's credibility could erode much faster than expected.
So there was a lot of monetary debasement in 2019 and 2020 as Powell pivoted and then COVID happened, and you could just kind of smell the money printer warming up and going again. And look at how gold took off like a rocket, okay? And it went from, I don't know, call it 750 to, almost up to 2,000, right? At the peak in 2020. And during that same time frame, look at how Bitcoin just languished along. I think on the scale there, I think it was around 10,000 about the time. It had actually been as low as 5, but it was kind of 10 in this window. And then suddenly, when the COVID thing really started to kick in, everybody figured out what Bitcoin was. Holy shit. Bitcoin went from 10 to 60 really fast. So gold moved first. Bitcoin crushed it when it moved. Much, much more movement. Okay, so then they kind of both calmed down. Gold dipped down. Notice again, gold dipped first. Bitcoin was still running. Gold was dipping. Whoops. Bitcoin followed it down. Sam Bankman-Fried played a role in that. Then notice how, gold starts to level off and we got a secondary run in Bitcoin because that whole run had been truncated by Bankman-Fried and the China thing. So it's a little bit of an anomaly. Then gold's kind of flat. Bitcoin came down there. The correlation didn't really work too much.
I think the correlation didn't work there, though, because that was, like, Checkmate describes that as the scam pump, because it was basically all the arbitrage, all the FTX stuff, the 3AC stuff. Like, I think you can almost ignore that second pump. Okay,
fair enough. Yeah, I was thinking, yeah, you're right. FTX wasn't 2021. It was over here. You're right. Okay. So then they kind of moved together. And actually, Bitcoin led gold down a little in 2022. Tighter monetary conditions. Okay, so now Bitcoin is enjoying, kind of the free money and everything. And when the free money gets taken away, Bitcoin gets slammed hard. Gold got slammed not as hard. But that's fitting with the, Bitcoin moves a lot further and faster, right? But here, here again, notice this. In late 2022, gold starts moving up. Bitcoin's still flat, right? Yeah, it comes up a little bit. Gold moves up even further. Okay, Bitcoin goes up a little bit more. Then you get a downturn in 2023, gold starts moving down. Bitcoin's still going up. Oh, but Bitcoin follows gold down. Okay, so now gold starts moving up again. And this time there wasn't much of a lag. Bitcoin catches up. Then Bitcoin really catches up. Then you pause, but gold moves out of the pause again first. Then Bitcoin comes and goes crazy up again, right? And so my point here is just that they're correlated, but often gold smells it first. And right now gold is cooking. We're over 3,600. We're running to 3,700. And everybody's kind of tired. It's amazing to me, right? Everyone's frustrated that Bitcoin's at 115. I mean, if you told me back here Bitcoin was going to be at 115, I'd have said hallelujah, right? I mean, and or that MicroStrategy. I mean, I howl at all these MicroStrategy people who are just crying in their beer that Saylor's done them wrong because MicroStrategy hasn't moved for a while. Well, just wait, guys. MicroStrategy is going to 1,000 plus.
Ultimately, Lepard frames gold and Bitcoin not as speculative punts, but as insurance against systemic failure. Even without hyperinflation, he believes they represent the best trade available. Asymmetric bets with enormous upside, backed by powerful macroeconomic forces. In his words, unless Washington suddenly becomes fiscally responsible, something he jokes seems laughably unlikely, investors holding sound money assets are on the right side of history.